be here and talk to you guys about what's happening. The market's obviously had a major shift today in the market, and I have Micah Haynes here, my top salesperson, aficionado in guns, prepping, farming. A real true renaissance man we have here is Micah. Good to have you on as always.
Thanks, man. Thanks, Colin.
I know you're busy with people buying and
yeah,
asking you a lot of questions, but what's happened? We've been running, silver's been running, gold's been running.
We haven't done this since the summer. And actually back then, I think what was funny is I had a breakout chart of us getting up above 34. We spent a little bit of time there, kind of July, August, 34 to 38. And since end of August, we've done 38 to 54. That's like a $14 move in like 6 weeks. So it's been great. We're going to get into some charts. We'll catch up on some year-to-date price action, and we'll cover today's sell-off too and what I think that could all be about. And then we'll just kind of wing it, right? So we've been so busy with selling, we haven't really had one of these in the several weeks.
Absolutely, yeah. And I appreciate your time. I know you're.
Oh no, it's awesome. No, these things help. I've actually had a bunch of calls in the last month or so of people who said, I saw your show and covering silver and I hadn't had those before. So what I think has happened is like we finally have kind of like generalist investors like kind of waking up and seeing this stuff. Mm-hmm. Most of our clients with big 401ks and stuff, they're mostly in the stock market. Actually right now, about 70% of total American wealth is in stocks. It's the highest allocation to equities ever. Right now, all the gold, all the miners, all the ETFs, anything precious metals related is still only about 0.5% in American portfolios. So it actually shows how early I think we still are here, even though prices have run so much. Imagine, Colin, that we just get like 3 to 5% of that 70 that's in stocks rotating out of there and into our space.
And it would help us in the metals market too, because those buyers are pretty much holders.
Oh yeah.
Right. Yeah. It's a more consistent portfolio where, they're not like day trading as much. So to get to 3 to 5% would be a pretty big number.
It's a pretty big number, mind you. Like gold allocations historically are somewhere in that 3 to 5% range. Right now, we're still extremely underweighted at 0.5%. In 1980, the top of like the biggest precious metals bull market of all time, globally, 10% of portfolios was in gold. So to go from 0.5% to 3 to 5 is like a 6 to 10 times, 6 to 10x in the market cap of this space.
Right.
So that means like you could see a 6 to 10 fold in the gold price still over the next however long that takes, right? So I guess what I'm trying to say here is we're just starting to see generalist investors like mom and pop kind of, regular folk come into this space, whereas still there's a vast majority that are in stock. So I think we have so long to go, and I'm encouraging people that this is, even though we've seen gold rise so much, and we're going to have a look in one sec, it's still really early. Once we get the rotation of capital where people are pouring into this space, whether it's because of the recession or the stocks market crashing or what have you, the floodgates are going to open on metals. So this is nothing. Like, we've had an extraordinary year, but it's zero compared to
based on those. I mean, if 10% of the world wanted to hold gold as an investment, like individuals, there would not be enough.
Couldn't be. No, that's my biggest.
Enough coins and bars available. And people are like, oh, that's hyperbole, but it's actually true. There'd be no way, because we've shifted from the 80s from the industrial demand is so much a bigger component today.
Huge.
And so there's just not that much for bars and coins. So if we went to 10%, even at 3 or 5%, I think it'd be hard to get bars and coins.
It'd be big strain. And I mean, at least at these kinds of prices, I mean, at much higher prices, you'd incentivize some of our long-term clients, right? People who've been with us 5, 6, 7, 8 years.
Yeah.
They would probably start letting go of the gold they bought at 1,000, considering we'd probably be somewhere at like 8 or 10,000 at that point. So,
Right.
a much higher price would incentivize long-term holders to probably get money back or metals back into the market. But my fears we're going there, Colin. I don't really know on what time frame yet, but we're not going to have any lack of demand. We might just actually have a hard time sourcing product, right? It's not going to be demand, it's going to be supply. But again, I think that's maybe a couple of years away.
Yeah.
For now, what I think would be cool is let's just kind of square it up. It's almost like I know we're late, but we can almost do like a Q3, what's happened since January.
Yeah.
Look at golds. If we want to pull up that chart, unless you want to talk about anything else before.
Let's get it. Let's get into it.
Okay. So skip this and let's just have a look here. So if you want to blow that up, JR, we can just have a better look. This is January to now. Now you'll note that massive red candle today. Gold is down 5.3% today. Okay. That's a big day. Silver's down. We'll get to that in a second, or the chart in a second, but down like 7% today. We're going to talk about why this is happening, I think. But first, let's just look at the big picture where we've come since January. Colin, you'll recall we had like $2,800 silver around Trump's election last November. Mm-hmm. And then after he got elected, the dollar shot up and actually gold dropped from 2,800 down to about 2,500 into Christmas. So we started the year at like $2,500, $2,600 gold. Okay. Now it started off the year pretty strong. It was rising, but gradually. And then we had all this kind of craziness after Liberation Day. We spent the summer consolidating, and then we've just been on the most magnificent tear for the last couple of months. And so I want to kind of break this down into like 3 chunks. We had a pretty solid advancing phase in the first third quarter of the year. That's kind of the inclination you'd see in a normal advancing phase where it's going up, but it's not going up at like a 65-degree angle, right? It's not going up like a hockey stick. It's kind of going up at a 45-degree angle. So we went from like 2,600 to about 3,400, right up until Liberation Day, which of course, the tariffs and all this stuff shocked markets. So not just metals dropped into that, but also you had equities and a lot of other asset classes get beat up into that early April, mid-April kind of phase. But we went from 2,600 to 3,400, and then we corrected all the way back down to, I think it was like 3,000. Okay. That's kind of the low that we've had since then. And this summer, we've talked about this before. I think we last discussed this in July, perhaps, maybe it was August or July, that gold, after advancing so much, needed to spend time just consolidating as opposed to dropping, right? So if you look at, let's say, mid-May through to pretty much end of August, it just churned within about a $200 range, kind of 3,400 to 3,200, right? And it just grinded sideways and grinded sideways. And instead of having to drop to reset price and momentum and sentiment, it kind of just bored the hell out of markets all summer long. Well, what happens is when you spend long enough going sideways and you let we've talked about this, moving averages, the moving average and the price of gold, you allow all that stuff to catch up, you're now giving yourself a really solid base and foundation to put in another advancing move. I will tell you this, I did not expect gold to go from 3,300 to 4,300 in 6 weeks. I just didn't. I don't think anybody did. I think we were all shocked at the steepness and the degree to which gold responded to federal interest rate cuts mid-September, a lot of the tariff and kind of geopolitical stuff between us and China going on. And, if I had to bet money, I said, yeah, for sure, we would have broken out at 3,500 and hit something like, 3,800 or maybe 4,000, but I didn't expect it to go up so high so fast.
Yeah.
So look, this isn't a bad thing. It's just that we have gold finally catching up to a lot of things like M2, so the money supply. You also have it catching up finally to how high and how expensive the stock market has gotten as well. I think it's also a factor of, we are seeing maybe early signs that the equities market could be, weakening and starting some kind of correction or bear market like a 2008, and we're getting a lot of rotation of capital from smart money or insiders. Um, Also, it's a factor of us seeing all the central bank buying. Right, we've got countries all over the place buying gold like crazy. One of the one of the things I wish I have this chart. I didn't include it today. I'll do it next time. Is one of the crazy things that happened in early September is for the first time in 80 years, Colin, we have the foreign balance of gold holdings higher than the foreign balance of the holdings in treasuries. So
Mm-hmm.
for the first time in 80 years, there's now more gold held by foreign countries than US dollars, which obviously tells you that this trend of shifting towards gold rather than dollars and going toward a more neutral reserve asset is really in play. And I think that's added fuel to this advancing phase, to this rally we've seen. But what happens is, like anything, like if you rise too fast, too far, and you go up at this kind of degree, like we now do have all these levels that need to be technically like retested, right? We went from 35 to 43 and a half, 3,500 to 43 and a half. But in my opinion, we probably have to go back to something like 4,000 at least in order to do something similar to what we saw through the summer.
Mm-hmm.
So if we go to this next slide, my guess is now it could go to 39, it could go to 38. But my guess is now we're looking at a similar period where we just need to digest the price gains that we've seen. I don't think we get a steep sell off. If we do, it'll be very short lived because there's so many buyers that are, and I can tell you this personal experience, like firsthand experience. I've called all morning people who've been waiting to buy both gold and silver, but are like, I just need to get it on the next dip, right? So there's a solid inflow of dip buyers who are going to come in here. Gold could even bounce up, but what I would say more conservatively is between now and let's say the end of the year, I would love for gold to digest and consolidate around this 4,000 mark.
Right.
It could be a little higher, it could be a little lower. I'm just giving you a general range. The reason is we'll let all the price um, averages reset. We'll let sentiment reset, and we'll let momentum and RSI and all the other technicals reset as well. Like you can't just keep going straight up, otherwise you're going to crash straight down. I want us to digest this and just retest and spend some healthy time going sideways.
And the sell-offs in the paper market and the sell-offs in your profit takers, but the data that will come out soon is this isn't a sell-off in your long-term holders.
Oh
This
no.
isn't a lack of confidence. That would have me more concerned than just a typical I'm gonna make some profit quick, and there's a lot of that in the market.
Oh yeah.
But the holders of the physical, I mean, we're seeing it. They're holding, strong, and they're buying, and some are buying more, and some are adding to their portfolio. So that's the thing to really keep in mind is you can have a market correction, paper correction, but what we're seeing on the physical is still a tremendous demand.
Absolutely. And actually, we've noted this before for a number of reasons. There's actually quite a bit of selling throughout the year this year. Okay.
Mm-hmm.
And there's a number of factors there, right? Like a lot of people think Trump's fixing everything. You don't need gold. Gold is at an all-time high, so it doesn't hurt to sell some if you have to. We had a lot of that, and just people who've been in this a long time. They're in their 80s and they finally need to, get back to cash for RMDs or what have you. So
Yeah.
all the way up until about August, I'd say there was actually like a fairly steady stream of sellers, but then the seller to buyer ratio has kicked all the way up to it just being like a pure buyer's market now, right? Buying and holding, and that's all that's happening. The selling has actually really ceased, which is good. So you're right. I think like people need to also just keep in mind, like this is like again, a intraday, intra-week.
It's a normal thing to happen.
We're not, I'm not anyway. And I know that all of us are very much the same. A lot of our salespeople here with new clients will tell them, this is not a trade. This is not like a couple clicks and you're in and a couple clicks and you're out. This is a a longer term buy and hold. It's just the very nature of being a physical bullion dealer. And I prep all my clients, not that they have to, you can buy and sell at any time, but I prep all my clients to have at least in mind, like a 2-year hold. I kind of say, look, come into this, only put into gold and silver, which you can let ride for at least 2 years.
Yeah.
Anyone who bought from me, Colin, or from us, 2 years or more ago, they're all up 50 to 100%.
Yeah.
Okay.
Yeah.
Anyone, I think 2 years from now will be up just about that same, maybe more. So you want to be prepared to think of this as like, I'm doing it, I'm holding it, and I'm looking at the big picture. And so the big picture for gold is we could spend some time consolidating here. It could be weeks, it could be months. And I'm not saying that to scare people. It just means we actually do need to have a healthy digestion of the 4,000 level. And it might mean going a little under, might mean kind of sticking it around here, but we will see $5,000 gold in 2026. Could be in the first 2 quarters of 2026. That's not far away, but in the meantime, what we're seeing today is, again, just letting off some overdue steam in terms of having to now just consolidate and congest around here, these levels.
Yeah, absolutely. Let's go to the next one. What do we got next?
Yeah, so silver we'll look at. It's even crazier. One of the stats I'm throwing out is gold's up 3 times more than the stock market this year, but silver's up twice as much as gold, almost. So I think the year-to-date return in gold is 53%, and right up until this morning, the year-to-date returns for silver, I think, was upwards of 70%.
Not bad.
Not bad. I mean, especially when you look at like people who were buying from us in mid-April were buying in around $28. And just up until like 2-3 days ago, we were at $54.
Yeah.
So like 28 to 54, my math isn't great, but what is that? You're talking about $26. That's almost 100% move from the low. Okay. Yeah. So, you're talking about a 90% move from the low. In the middle of April, which isn't that far ago. It's like 5 months ago. So you've had 100% move in the price of silver in like 5 months. That's actually kind of the beauty of silver. But as we're seeing today too, I mentioned it's a 7.5% drop right now. Huge swings to the upside. You can have these pretty big drops to the downside as well. It's just a little bit more volatile than gold because it's such a smaller market. Now, again, look at this though. Like this is the steepest, like this thing almost before the last couple of days of correcting, it almost started almost going back in time, like curling up on itself, right? It's just been going up in a straight line. Basically, we've had almost no down days. The dips are always getting bought. And I actually think that that's what's going to happen this time around as well. But 50 was a really significant level for us, Colin. 50 was obviously the nominal all-time high, hit twice, 1980 and 2011. I actually suspected that we were not going to get through it as cleanly as we did on the first go-around. Yeah. I figured we'd whack our head on there, come back down and congest in the mid-40s before really getting through there. So we did get above there. We traded above there for several days, but now obviously we're seeing the same thing in gold. So this is a matter of us not having gone up slowly, right? This advancing phase was just too much, too fast. Now we probably have to go back and retest something like 46, 44. I mean, when we were at 38 in August, I would have told you we had to go 38 to 40, maybe back to 38, and then up to 42, and then back to 40. And so this 2 steps forward, 1 step back type of mentality where you can make new highs, but then you have to retest those previous resistance levels now as support, meaning what was always a ceiling on the price, now we want to try to come back and make sure that it's a solid enough floor before we take out that next kind of ceiling or milestone. Well, we didn't get that. We literally just took the elevator like straight to the top, straight to new nominal all-time highs within a matter of weeks. Yeah. So again, have the fundamentals of this market changed? Absolutely not. Have has the investment thesis for silver changed at all in the last couple of days? Definitely not. But the whole short squeeze phenomenon, which some people will give weight to and some people won't, we do know that banks through the summer were record short silver. They were losing about $400 million for every dollar rise in silver. So we've risen $14. That's, how many billions of dollars in losses. So not saying they actually sold those positions and took those losses. That might explain to some who want to give it some weight why they're maybe now aggressively hammering it so they can actually get out of these shorts maybe in the mid 40s rather than the mid 50s. Okay, that could easily be what's happening here as well. But rather than, as much as I am a tinfoil hat, conspiracy theorist, I'd like to just look at price. Price just to make it super simple for clients.
Yeah.
Price just rose too far, too fast. We need to retest areas that we had broken out from and that we never got back to until maybe now. And I suspect this might last it could be a few days, it could be a few weeks. Like with gold, we might have to churn around the mid 40s into the end of the year before we build up steam. But let's go to this next chart, because this is actually what I want everybody to keep their. Oh, sorry. This is just showing we might have to go and retest the 50-day moving average, which would be around $48. Actually, this is where we are now. Okay, so we might only get down to 40, 48 or so before going higher, but we might have to go something lower, like 40, 46, 45, 44 before going higher. But this next picture, is the big picture, and this is what people need to have their eyes on. Don't focus so much on the dates at the bottom, but this is a 50-year cup and handle formation. We've talked about this many times, Colin. Yeah. This is like one of the most bullish technical patterns you can ever have. And the longer and the broader the base, the more time it'll spend in space. That's one of these sayings in technical analysis. The longer in place, the higher in space. Well, there's no asset that has a longer, bigger, broader, more technically perfect cup and handle formation than silver. And when you see this pattern in anything, you could see this in a stock, you could see it in a tech play. Whenever you see this chart, it pretty much tells you it's going way higher once it breaks out of that handle. Now we have technically broken out of that handle. And my guess was we would get to something like 55 to 57 before having to come back and retest where we are kind of right now. We didn't quite get there. We got to 54 and change. Pretty darn close. So there's kind of one of two paths I think that happen here, right? We retest the breakout around 40, call it 48, 46, and then we move much higher and in perpetuity. Like we're going to get into, you can't see it, it's too small here, but I'm looking at like $200-300 plus silver by the end of the decade. Okay. That gives us 3 to 5 years to get into those zones. But the red line, and it's still a possibility. I figure it is less probable, but it's like, maybe we're not ready. And again, don't worry about the time axis at the bottom, but maybe we're not ready to go through 50 yet, right? Like everyone said, oh, it's through 50, it's never looking back. I had my doubts. It's not because I'm bearish silver. I'm one of the craziest people out there. Like 90% of my net worth is in silver, physical silver, right? And I'm not suggesting that for anyone other than myself, but I'm telling you, we could go straight to my targets, or we might have to go back below 50 like we are right now and just spend a little bit more time building up, mustering up the energy to get through that zone. Either way, Colin, we will get through that zone. We are going much higher. To your point, the fundamentals, the technicals, supply and demand, industrial uses, BRICS currencies, the monetization of gold and possible monetization of silver down the road. All these things are extremely bullish. And if people thought that the run from August to now is crazy, we haven't seen anything yet. But first, and this is my hope, first we'll just spend some time building up the energy to really move higher around here. Okay, so I'm not bearish in the short term. We might have to go a little bit lower or just go sideways. It's actually a great opportunity. Again, the calls I'm making this morning are all for people who've told me, I have cash. I own a lot of silver and I also have cash, but I want you to tell me when I think we're going to get a little bit of a dip here so I can get in. So I can't tell you how many hundreds of thousands or millions of dollars I know personally from my clients that are on the sidelines waiting for what's happening right now.
Yeah.
But they're not getting the buy signal from me yet, only because we might be days or weeks away. We just got to see.
Yeah. I mean, I think since I've been in this business for 17 years, people that are skeptical have always had this, they want to buy at the perfect time. And I can tell you, I have a lot of people that have been texting me that last year were like, you told me to buy and I didn't. Now, now I'm going to buy. What do you think? But I'm not going to buy. And I've had these conversations with people for 17 years. And at the end of the day, like, we can present all the information. We have a strong feeling about things. The thing about buying this, as opposed to buying a stock of a company, is that there's very few companies that will be around 10 years from now. And we've seen that on the Fortune 500. I mean, there's so many companies that were there for 20 years that are no longer there because the thing that they sell is no longer necessary. And I think in 10 years, there'll be a lot of things that we think are important today that also won't be necessary. And there's people looking at the stock market at those stocks, and they're saying it's okay to buy them at high prices, right? A lot of people are buying the stock market at a high price, even though we know that AI and a million things are going to reduce a lot of companies to rubble. I mean, there's a lot of companies out there that are not going to be around, and yet people feel comfortable there, and that somehow there's some skepticism in gold and silver. And so what I would say to those people is, if you feel comfortable in the S&P and a lot, know this, that 80% of those companies in 20 years will be gone, and you're investing there and you're putting a lot of your net worth there. There is no doubt that gold and silver will be used in industry in 20 years. You could make that bet. It's been used. Gold's been used for 5,000 years. Silver's, I think there's close to 10,000 new industrial uses for silver since the Hunt brothers tried to corner the market in 1983.
Yeah.
So what is the long-term safe bet is that you are going to do okay in the long term as long as people need it. And there's no evidence out there that gold and silver will be less used than they are today. And actually, that a lot of ways will be more used. And that's why Saudi Arabia and Russia did a massive silver buy about a month ago. And it was a buy in, and they were buying it as an investment. They weren't even buying it for industrial use. They were buying it as a strategic asset in their portfolio. I mean, that's such a massive shift, because those countries obviously buy silver mines and they buy silver for industry, but they bought it as an investment. So I think that's the thing that I always hang my hat on, is like, I don't know when it's going to go to 100 or 200 or 300, but I do know that the dollar's losing value, which means everything's going to go up. And if these metals continue to be used, if central banks continue to buy them, which they are, then the likelihood of it continuing to go up over time, you're just betting on everything that's already happened, right? You're betting on $37 trillion in debt today is going to be 45 trillion in a year or two, which it's going to be. And so what does that do with the value of our currency? The value of our currency goes down. That means assets that people need, the price goes up, whether they're going up in value or they're just worth more because the dollar's less. At the end of the day, it doesn't really matter to you as an investor. So that's the thing, is I get so much of this is when we have I told you there's going to be a big correction. It's like, okay, I told you. They told me that when, it went down to $14 in 2020. They were like, oh, that's it. Silver's going back to $5 when it went back to $14. And sure enough, it hit $13.92. I remember, somewhere around that.
Bounced.
And it just, boom, bopped right up. And within 6 months, it was at $29.
Right.
So there is a price point, whether it's 47 or 45, there is a price point where the market will go in and sustain, and it'll go sideways, and maybe it continues to go up.
Yeah.
But there is a price for that, because we have to have gold and silver in this world. They have to be used. That's
exactly. Yep. Yeah, 100%. So you nailed it. Every aspect. There's not a lot of supply. We're seeing tightness in the bullion market for silver, not so much for gold, but also just tightness in mining supply. Right?
Yeah.
There are no pure silver mines anywhere other than a couple here in Mexico.
Yeah.
But other than that, 70% of all the silver that gets pulled out of the ground is just base metal mining byproduct. Right. So we're mining for zinc, we're mining for tin, we're mining for copper. Silver comes out along the way. That we've talked about this before. You can't just say silver's a strategic commodity. We need a ton of it. Let's turn on all of the, turn on your engines and mine more of this stuff. You're not gonna be able to do that,
No.
unless you're incentivizing or, nationalizing all these other base metal mining companies and forcing them to just pull as much silver out of the ground, right? So
Yeah.
I think the setup has never been better. People though are
It's like
funny.
it's like when our kids, like, that analogy of like, just go mine more, is like when our kids are like, we'll just make more money. Well, oh,
Yeah.
okay. Well,
Oh yeah.
that's, yeah, sure.
I'll just pull it off the tree in the backyard.
Oh, it's that easy. Oh, okay. I'll just go. I don't know what I was thinking. I should just go do that.
I know.
The mining's the same thing. You can't just flip it on like a switch. Like,
No, it takes forever. It takes 10
and I
years.
always say this too, is like silver's not at a point yet where there's going to be massive mining because it's cost so much to mine. Like, they'd much rather mine gold or other things that are thousands and thousands. Like, if you just look at the numbers, once silver hits $500 an ounce, yeah, there'll be probably more silver mines because it'll make sense financially. But it fits even at $50. We're still, it's not there. We're running long on time, so let's just wrap real quick, Micah.
For sure.
Give me your.
Yeah. So what I would tell people is, what we're seeing now, just roll with it. I want this as a long-term buyer and holder. I actually want price to reset. How sharply and how quickly and over how, that stuff you can't control. So all you can control is your emotions, right? Know that this space is going much, much, much higher. If you haven't yet bought, this is probably the next best buying window over the next couple of days, couple of weeks. So give us a call. We can walk you through this stuff. It's not a trading asset. It's a long-term buy and holding asset. You'll do extremely well on it in not very long, but the longer, the better. And yeah, just basically, people have been wanting to buy this stuff at $50 who I was calling at 30 and they wouldn't really buy it at 30. Now they want it at 50.
Yeah.
Well, unfortunately, the way I think it's going to go is we're going to get to like 45 and I'm going to say, hey, this is the pullback you were waiting for. And they're going to go, 45. I liked it better at 50. And like, okay, well,
yeah,
I'll see you in $5. I'll see you in $5.
I'll see you at 60.
Exactly.
So let's try to be smart and say, let's not see you at 60.
Right.
Give Micah a call. He's great. He'll spend as much time as you need. Really one of our most patient traders on the floor. Obviously, incredibly knowledgeable and a good person. Like, I mean, that's, we in a non-regulated industry, like, you read our reviews, talk to our team. I think going with the right dealer or the right person makes a lot of sense. So everyone that's been on, thank you. We appreciate you. We appreciate all the support. Call Micah, get some information, just get free information. Talk to him.
100%.
Even if it's not your time, like, talk to him and get a feel for us. So we have a relationship. So when the timing is right, you're ready to go. And I think the market will speak for itself, but demand is still incredibly high. So give Micah a call. Check us out at Noble Gold Investments. The number's there.